So let's look at the business restructuring relief. Now, what exactly is a business restructuring relief? In the world where the businesses are expanding quickly and they need to either acquire business or get rid of certain businesses which are not core, certain businesses may undertake core restructuring. What that means is they may either transfer their business, and if they are transferring, there might be someone who's acquiring it. This can be done in two ways. One, you have more than one business, you transfer one of the business and retain the other, or the entire company is moved along with the business to someone else, and the transferor company, which is the company transferring the business, does not exist any longer. These kind of transactions, where they are not undertaken for the purpose of realizing the benefits that have been created in the business per se, and which are done for commercial and non-fiscal reasons. I would repeat, for commercial and non-fiscal reasons. They should not be done for the purpose of tax avoidance. If these are done in such a manner, then in those cases, any profits or gains arising to the transferor on transfer of existing business or transfer of the entire business as such for shares or interest in the transferee are exempt from UAE corporate tax. There may be cases where part of the consideration may be allowed to be paid in other than shares or interest, but that is subject to certain conditions and is not a blanket exemption. We are going to look at all these in the coming slides in the form of business restructuring relief. Now, talking about business restructuring relief, there are two situations which are envisaged in Article 27 where a business restructuring relief may be allowed. The first one is a case, and let me highlight this here, where a taxable person, so the condition is that the transferor should be a taxable person. He transfers either entire or part of the business to another taxable person in exchange of shares or ownership interest. So you have one taxable person, he transfers the business to another taxable person, and what he gets in return is shares or ownership business. Now, some part of consideration is allowed to be received in consideration other than shares or ownership interest, but what exactly is that we're going to look at as we move through this presentation. In this case, the important point is that after the transfer of business, both the first and the second taxable person will continue to exist. The second case, which is envisaged in Article 27(1)(b), the first one was under Clause A, is where one or more taxable person transfer their business to another taxable person as a result of transferee and transferor ceases to exist. So there could be one or more taxable person. Let's say there are company A and B. They transfer their entire or part of business to taxable person C. In this case, after the transfer, A and B do not exist any longer. It is only C which survives, and the entire business is transferred for consideration in the form of shares or ownership interest. Again, some part may be allowed to be taken in cash. What exactly that is, that we will see in detail as we move through this presentation. If the conditions of Article 27 are satisfied, then the profits may not be taxed. So when you sell a business, normally the profits that you get will be taxed. But if you meet the condition of the business restructuring relief, then the profits may not be taxed, provided the relevant conditions are met and the transferor has elected for the relief to apply. So this relief is not automatic. The transferor has to apply for this business restructuring relief. Let's look at what are the key conditions. Now, these conditions are common for Clause A and Clause B, but there is only one difference that I'm going to highlight. In both the cases, the person transferring the business should be a taxable person. If he is not a taxable person, the relief is not available. Why? Because in that case, the income may not be taxable by itself only. So where's the question of relief? The second is that the transferee or the person purchasing the business should either be a taxable person at the time of transfer, or such a person should become a taxable person by virtue of this transfer. So what this means is, when the business is transferred, either the purchaser should be a taxable person. That's simple. or he becomes a taxable person. Why? Because now he's going to get a business which is taxable. The entire business or an independent part of business is transferred. Now, when we talk about clause A, both these provisions are applicable. That is, either the entire business could be transferred or one part of the entire business could be transferred. But under clause A, the thing is that the transferor would continue to exist. Whereas under clause B, it is the entire business that has to be transferred. There is no provision that a part of the business will be transferred. And the reason for that is quite simple. The condition is once the business is transferred, the transferor ceases to exist. If you cease to exist, you cannot carry on any other independent business. And therefore, the condition is specific to part 2. The consideration in this form has to be in the form of shares or ownership interest, right? Some part of consideration can be allowed to be paid in other consideration as well. We will see what are the conditions attached to it. Now, in this case, when we talk about the transferor, or let's say, just keep it simple, seller and buyer. In this case, the consideration can be paid by the buyer or a person who has a direct or indirect interest of more than 50% in the buyer. Similarly, the consideration can be paid to the recipient can be the seller or anyone who has 50% or more direct or indirect ownership interest in the seller. It's not necessary that the consideration has to flow directly between these two parties. Now, what is the meaning of a business or an independent part of business? When we talk about business, it would be any activity. This activity can be industrial, it could be commercial, it could be vocational, it could be professional, it could be in the form of a service. All such activities would constitute business provided they are conducted on a regular basis, on an ongoing basis, and independently. So what this means is that a business is more than an isolated transaction depending on the nature and circumstances. If you do an activity on a regular basis, if you do an activity which is independent as in it can be run independently as a business, then it would constitute a business or an independent part of business. When there is a transfer of a part of business as against a complete business, it will be considered as an independent part only when it has the capability to operate independently as a business. What does this mean? Let's look at through an example. Let's think there is a company A which is into real estate. Company A has a project, Blossom, which basically has developed in two phases, phase 1, phase 2. Each of these phases have separate entrances, separate towers, separate common facilities like playing area, gymnasium, club, etc. And what happens is that A decides to transfer one of these to another company. Now, even though the entire business is real estate, of which Blossom is one project, but within that project, if there's a complete unit in itself that can be transferred, and from such a transfer, it continues to earn income. So let's say, for example, it does not sell the independent unit, it earns lease income out of it. So even if it transfers this P1, what is going to happen is it will continue to earn rent from all the apartments which are leased. In such a case, it can be said that it has the capacity to operate independently and therefore it would constitute a business. The third condition is that the transfer should be on a going concern basis. Going concern and liquidation are two bases, which means that a going concern means that a business is continuing and there is no reason to believe that the business would be shut down in the near past period. The definition of going concern has to be seen as per the relevant accounting standards applicable to the taxable person. However, the question that comes up is, if after the transfer of this unit, some operational support in terms of, let's say, accounting, IT, etc., which is not core to the business, is required by Project 1 from A, in that case, can it still be said that it has transferred a part of business, or is it that this condition will be deemed to be not met? The answer to that is, if the operational support is not something which is core to the business can be run It is a good to kind of have thing, a support thing, and that too on the operational part of it. Still, a stand can be taken that there is a transfer of a part of business, and therefore this condition should be said to have been met. If a consideration that is issued is not in the form of shares or other consideration, then it is acceptable as a consideration and to meet the condition of the business restructuring relief as long as the amount of consideration, let's say, when we say other form of consideration, let's consider a simple example of cash. So the total consideration is 12 million, out of which cash paid was 0.9 million. What that means is that the cash consideration is 0.9 and shares and ownership interest is 11.1, making a total of 12. The net book value of asset transferred is 11 million. Yeah. So as long as the consideration paid by way of cash, which is consideration other than shares and ownership interest, does not exceed the lower of the following two numbers. One is the net book value of the assets and liability transferred. What is that? That is 11 million in this case. And second is 10% of the nominal value of ownership interest issued. How much is the ownership interest issued in this case? It is 11.51. It cannot be 12. 12 is the total consideration, out of which 0.9 is paid in cash. So the nominal value of ownership interest issued is 11.1 and 10% of that would be 1.11 million. So long as the cash consideration does not exceed the lower of these two numbers, which is 1.11 million, the part payment of the consideration by way of cash or any other form of consideration will be acceptable. In this example, because that consideration is 0.9, which is less than 1.11, the condition that the consideration meets the requirement of business restructuring relief can be said to have been met.